Hello and welcome to our viewers on cruxinvestor.com. We spoke earlier today to Patrick Downey, he's the CEO of Orezone, their West African gold developer. We spoke to them about their recent feasibility study announcement, also some discussions around debt and remodeling to their drill program, plus some anti-dilutionary measures that they're taking, along with the general simplification of a lot of their internal processes. If you want to find these topics in the video, please look in the description below and click on the relevant timestamp. And also, if you're new to cruxinvestor.com, please click the button in the corner of the screen to subscribe to our YouTube channel. Hi, Patrick. How are you?
Very well. How are you?
Not bad, not bad. And we saw each other back in May at the one-to-one conference, and you were doing the rounds there.
That's correct.
One or two things happened since then. Perhaps we should talk about those.
Yeah, I think when we talked to the one-to-one, we were just about the final stages of our updated feasibility study.
That's right.
It came out actually better than we originally thought it would. We said in January that we were going to build a 1.2 million ton sulfide plant. It turned out that we were capable of building 2.2 million ton. A little extra capital, but significantly better economics.
Well, yeah, I mean, we should talk about that because obviously that your share price when we met was at 39 cents. It's now at 62. You've had a nice bump there. I'd love to take all the credit for that, but I think it's down to the feasibility. So we better talk about it. So why don't you give us the highlights there, because the NPV has changed significantly. Some great numbers in there.
So essentially, in 2018, the NPV was around about 220 million. What we did was we really planned this on the basis that we could build the sulfide expansion from the cash flow of the first couple of years of oxide. Yeah. The oxides in the first 2.5 years are really high cash flow because there's really no pre-stripping, low strip ratio, and it's the highest grade oxides, right up front. So and it's a pretty simple circuit to build. So we looked at the sulfides. We expected to be able to build a 1.2 million ton per annum plant there. But once the reserves started coming together, it became pretty obvious to us that was we were going to run out of oxides before we ran out of sulfides. So we married the two flow sheets together to come up with a 2.2 million ton per annum sulfide circuit. So that comes in year 3, and it adds around about 700,000 ounces of recovered gold. So we had about 1 million in the first, and the oxides we're now at 1.7 million.
That's great.
The margins as we add in those ounces are significantly better than the margins of the oxides at that time.
So what's the additional cost to you for doing that?
It's including, there's a small resettlement program at the bottom end, which is an area right to the south. Including that, we're around about $65 million.
Okay.
And we could have built this for significantly less, probably 10 or $12 million less, by integrating the sulfide circuit into the oxide circuit. But we made the conscious decision to build a separate circuit so that we can operate the oxides fully independently from the sulfides. So when you're crushing sulfides, grinding them, you're not interfering with the oxide circuit. They only actually blend once you put them into the CIL circuit.
So that's getting a wee bit technical. So, okay, you could have saved 10 to 12 million, but you chose not to because you can keep them separate. So that's got to be an economic decision at some point. So it's not just about what you're saving.
It's an economic decision from a IRR and NPV point, and also purely from an operational viewpoint.
Right.
The oxides are free milling. They don't need not free milling. They're no crushing. So you don't have any of that. It's very simple grinding at significantly less power cost. You add in a sulfide mix there, and you can have, or we believed you could have operational issues going forward.
Right.
So this just allowed us to completely separate that and make it a much simpler circuit.
That sounds more like what the decision is based on. In terms of it's simpler because the IRR hasn't moved much. You've moved 1.2. You've gone from 42.6 to 43.8. So it's not a significant shift, but obviously the NPV over 140 million more. So it's impressive. So you just try and, in fact, you used a phrase with me last time what you bought was overly complicated, and you've tried to simplify it. Would you say that's the secret sauce?
That's the way we want to keep it.
Right.
We've always made this so that, you know, really when you put in a sulfide, a big SAG mill, which we've got there, a semi-autogenous grinding mill, you do have periods of time of about a week where you have to do complete relining of that SAG, your plants down, and that's fine. But the way we've done this, when that's happening, the oxides can continue running. We don't interrupt them. It's a very simple circuit. And in places like Africa, that's a real bonus. And we do it because the CapEx for the oxide is reasonable. And the CapEx for the sulfide is very reasonable because we're not adding CIL, we're not adding kitting. So we're just adding a bolt-on section.
Right.
And that's what really drives the MPV.
Okay. So again, just want to talk about a few things. I mean, we can talk about the project as a whole. You know, you're on the right postcode. You've got B2, West African, Bezo, Semifo, everyone you need to be around to endorse this for people new to the story. You're in the right place. You also talked to us last time about de-risking, and you spent a lot of time in terms of, as you say, talking about the de-risking of the project. So why don't you tell people about some of those things? I'm trying to give them a sense of the type of management team that you are.
Well, we're a very operational focused team. Generally, when we look at a project, we look at it from, you know, how will we operate and maintain this and make it simple. Visited a lot of projects, not just gold mining projects. You know, for the oxide, we looked at it from the point of view of handling this sort of material. It's fine grained. It's got great properties in the sense that you don't need to crush it, minimal grinding, but it's clay, it's sticky in the rainy season. How do we get around that? So we designed the front end with a little bit more capital to allow us a simpler operation. We visited nickel laterite projects, we visited bauxite laterites, and we come up with some great ideas from those operations that we've incorporated into this. On the sulfides, we looked at it and said, well, look, this has to be a crushing grinding circuit. So if we blend it in with the oxides, now we're adding a level of complexity there that we don't need to add to the oxides. We're going to need it for the sulfides. So we looked and said, how do we simplify this from an operational point of view? Okay, let's make it totally separate. We can look after it. It'll only ever deal with the sulfide rock. So when we have to maintain it, you know, and line the SAG mill, etc., we don't interfere with any other part of the operation. It can all be done with a small specialist crew that do not have to worry about getting back up in 2 days or things like that. And so and when we talk to our operating team about going forward, they love that aspect of it, that, you know, doing this gives them that flexibility.
I just want to point out, you know, your AISC is low. You're, you know, about 730 you've talked about, and I'm sure you'll refine that over time. You've reduced technical risk. You've got, the thing that interests me is the small CapEx number. I mean, relatively small CapEx number, which I suspect you're going to deal with using debt. You said you've had some debt conversations.
Yes.
So how are they going? What's happening?
They're progressing very well, and one of the aspects of adding the sulfide to the project is that now you still only have to borrow the money in debt terms for the oxide project, right, but you're adding significantly more ounces against that, and you're not having to go to increase your debt load for the sulfide. So we believe that gives us much more debt carrying capacity at the front end. So it really essentially reduces the amount of equity we would have to issue at the front end going forward. So that's a very, very important part of this project. Even when we build a sulfide project, we never go cash flow negative during that period of time. We're still cash flow positive. So we can build the sulfides out of cash flow, and we can continue to pay the debt for the oxides right through that. And we have a longer mine life on which to amortize that debt against. Yes,
and some really, really interesting, what people call catalyst moments, hopefully for you. And when we talked last, you said, once we get this debt in place, I think we'll get a re-rate, because that's just priority. That'll people have some sort of level of comfort as to when we're going to get into production. Do you think the way the market's going, obviously gold up, you've seen a bit of a bump since your FS has come out, or maybe partially because gold is up as well. We don't know who's going to take credit there entirely. Do you think you're going to get this re-rate?
Yes. Look, I think when we're able to announce the quantum of debt that we can carry against the project, that the project can pay back, then people will know what your equity piece will be, and they'll know that it's not one of those equity pieces that will end up crushing you. So your NAV per share is really badly affected.
You're about 0.2 at the moment on your EV NAV ratio, which is obviously quite low. You'd hope to be nearer 1.
Yeah. Yeah, and so what we want to do there is go out in generally August, September, probably September, to get the story out more, get people to recognize the story. I think hopefully we'll be able to make a few moves to show people how, where things are going. And at that point we would, essentially look at where we put the pin in on the debt at that stage. So the debt is proceeding very well. We're going through the technical due diligence now. We would expect that to be complete sometime in late August, early September. And then at that point, we'll start to see what level of debt we can carry.
Essentially, I mean, are you getting under any pressure from, obviously things are moving along, the share price has taken this bump recently, which is up, which is great. Are you getting any pressure from people like RCF, who, we talked about them being sort of a very technical partner and committed partner, but, they came in at 80 cents. They must have some degree of comfort as to where this is going, and probably as long-term players, maybe they were never worried. I mean, what are they talking to you about?
I would frankly say they really, really like our project. It is one of their key projects. They tell us they're a great supporter. We have been very communicative with them. We have monthly updated management meetings with them. They've been to the project. They've now seen the study. They're now taking all of the technical data from the study to see, where it means for them. But I can tell you, they would be more than happy to add to their ownership at this point. It has gone. When we sat down with RCF, and we knew each other. We from a long time before on other projects. When we sat down with them, we had a program and a plan as to how we would execute. And I think they've seen that we have absolutely executed to that plan, which doesn't always happen for various reasons. And that gives that great degree of comfort.
Right. I mean, that's an interesting point. And sorry to segue off of your company, because we're here to talk about you and what you've done, Patrick. But it's an interesting point. We were talking to a bunch of investors and around this component of how do you keep information, reports, like whether it be an FS or otherwise, secret? I mean, how do you stop leaks from happening? How do you stop as a CEO? How do you manage that process? I mean, my view is there must be between 10 and 100 people touching that before it comes public knowledge. I mean, what's the process?
Well, the engineers are generally very focused on doing the engineering. They're not focused about leaks or telling people, and they're not generally market related.
I know that, but it gets out,
Well, look, when we set out to do this, our technical group internally, we did a fair amount of work to figure out, was this worthwhile going forward and doing. So we put out a press release in January that was pretty detailed in what we were doing and how we were going to do it and what we felt it was going to look like, etc. And it was all based on technical fact that was already generally in the market. We weren't telling anything that we were guessing at or whatever. And then when we walk through it with our shareholders, we generally, if you just give them, look, we feel things are going well, things are on track. We should have the study by Q2. We think it'll add something in the region of 80 to 100 million to our NAV. Obviously, turned out to be better than that. And so you're on track. Generally people can read when you're sitting in front of an investor and they say, well, when you talked about this a few weeks ago, you were saying 80 to 100 million. Do you still think that? If you hesitate and go, then they're going to go, oh, That's not good. If you're, confident to say, well, at this stage, yes, I would believe that's, where we've said that in the public market, we've no reason to change it. And so you keep it in that way. So there is a fine balance between, keeping people continually informed, your disclosure, and making sure that you're not saying anything that's not, in the public market.
Well,
and we are generally very conservative about how we go about it, and we take a conservative viewpoint. We generally don't actively market during the critical phases of a study. We only go out when we're ready to talk about it as we're going through it, but not when we're in the critical phases. We do not market. We do not talk about it.
But would you agree that sometimes in the market it perhaps doesn't go that way? I appreciate how you manage it.
Oh yeah, look, absolutely. I mean, there's times when you go, well, that wasn't right, or how come they said this and what? And so things do get leaked out. But I would say from our point of view, we were very, very close. I mean, even my directors, I kept them informed, but until I knew where the numbers were almost absolutely right, it was only that I said to the directors, this is where I believe we're going to be, and we're going to be ready to put the pin in it in 2 weeks.
No, I appreciate that from you. I mean, we like your story, and we like the way that you run a very tight ship. You're one of the most active retirees I've ever met. You said last.
My wife said as well.
Well, because it touches upon one of the other subjects which we keep getting asked about, which is around salaries and remuneration and so forth. You guys have put your money where your mouth is, and you're remunerated along with the shareholders. So one of the few companies where you say we're aligned with our shareholders and mean it, because we have been getting lots of questions about highly paid mining executives, but I think you perhaps don't fall into that category, which is great. Well, let's talk about just one last thing, if I may. You're going through a resettlement program at the moment, which you think is quite important. Obviously, again, another thing where you can cut costs, but you haven't. You want to tell us about that?
No, I think, I really have to give a lot of praise where praise is due. The guys down there on the ground who have been running with this and doing all of the work in the background did a fantastic job. And we approached this in a very systematic manner. When you're building a mine, you're upsetting other people's livelihood. And generally you have to move, and it's fairly well controlled and managed in Burkina because there's been a lot of mines built. But we went about it whereby we didn't go cheap on the houses. We got everybody to sign off, but one of the key things that we felt was, look, these guys are signing off on drawings and maybe they don't fully understand what they're looking at. Let's build sample houses. It's going to cost us a little more. Let's build sample houses in each village of the type of houses we're building. Let the communities come inside, look at the finished product, give us any changes or issues that they're concerned with. We did that. We did have a couple of changes, actually. It was around capturing water and stuff that they're going to use, and they were extremely happy. That got out to the authorities in the sense that the mayor, the ministers. We had a RAP opening ceremony in May.
Yeah.
Sort of unprecedented in that part of the world. We allowed for 1,000 people to attend. 3,000 people attended. That's all of the communities. Everybody turned up. It was a fantastic day, a fantastic celebration. And it goes to show you the work that we're doing, not just in building houses, but in the livelihood restoration that we're doing, the work that we've put into community programs, water, schools, land restoration, all of those things. I got to say, I'm extremely proud of that. I'm extremely proud of what the guys have done, and how well it has been managed and executed on the ground.
No, it's very, very important. It means a lot to people there for sure. Okay, we're going to finish up. Can you tell me, okay, you've extended the life of mine, 10-year life of mine, 134,000 ounces over that period of time. You've done your FS, you're looking at the debt position at the moment. We'll get into production. Your 130 million market cap today. Something wrong with that picture? What should investors know?
Well, I think that we had to live a little bit of the legacy of what occurred in the past, and we're getting out of that as we move forward here. I think also as they see us continuing to develop the project, the confidence level will come back to it. We are getting a lot more inquiries about the project and the company. The other key thing that I think will happen and will be a catalyst here, we have been drilling, reasonably quietly, but we decided that there was a model here that we should focus on, particularly in what's called the hanging wall of the project. The main footwall is very continuous. That drilling has been very successful. The modeling is coming up very exciting. Some of the grades that we have there are 7-8 times the average grade of the deposit. It's wide open at depth. So that's going to be, I think, a very exciting catalyst going forward. We are going to put aside some money for that over the next year to do more drilling. And I think once that people understand what that means, drilling still gets people excited about a project. And it's not just building it, it's also showing that it's got a long life and it's got great upside. And so we're just about to finalize that model, and then we go to the board with a proposal to set aside a certain amount of monies to drill it over the next 12 to 18 months. And I think that would be another big catalyst for us.
Right. In the short term?
In the short term, getting the debt in place and showing what the debt carrying capacity is. Some other moves on the debt, which we've got a lot of irons in the fire here that we're looking at that will reduce the level of equity that we have to put in.
Right.
And as you rightly said, we are in there alongside our shareholders. We are big shareholders of this company. So NAV per share for us as employees and management is extremely important. It's not building a project just for the sake of building a project. It's building a profitable project that returns equity to the investors. And that's what we're looking at.
Patrick, I appreciate your time today. That's a great summary. It's great to speak to you again. I think it's a really, really strong project in West Africa, and people should be looking at it. We look forward to speaking to you again soon, sir.
Yeah, I hope the next time I speak to you, we will have doubled the share price again.
That would be lovely. That would be lovely. Well,
I will give you credit.
Finally. Well, look, brilliant. Thanks again for your time, Patrick. We'll speak to you soon. Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.